Greetings from Edu Aspirants, our YouTube channel to ace academics, competitions, entrance exams, as also for enrichment of knowledge. In the series of videos on India, let us see what we have for you in the fourth video on finance in chapter 14. The Department of Financial Services, DFS, is mainly responsible for policy issues relating to public sector banks, PSBs, and financial institutions, including their functioning, appointment of chairman, managing directors, and chief executive officers, CEOs. Executive directors, EDs, chairman cum managing director, CMDs, legislative matters, and international banking relations. Appointment of Governor, Deputy Governor of Reserve Bank of India, matters relating to National Bank for Agriculture and Rural Development, NABARD, Agriculture Finance Corporation, cooperative banks, regional rural banks, RRBs, rural and agriculture credit. Matters relating to Insurance Regulatory and Development Authority of India, IRDAI, and matters relating to pension reforms, including the new pension scheme, NPS. Legislative and other issues of Pension Funds Regulatory and Development Authority, PERDA, are also its mandate. The Regional Rural Banks, RRBs, were established under Regional Rural Banks Act 1976 to create an alternative channel to the cooperative credit structure and to ensure sufficient institutional credit for the rural and agriculture sector. RRBs are jointly owned by Government of India, concerned state government, and sponsor banks, and with the issued capital shared in proportion of 50%, 15%, and 35% respectively. So 50% shared by Government of India, 15% by state government, and 35% by the sponsor banks. The central government established the Rural Infrastructure Development Fund, RIDF, within NABARD by the way of deposits from scheduled commercial banks, and its allocation is announced in the Union Budget. Life Insurance Corporation of India, LIC, was established by the Life Insurance Corporation of India Act 1956. LIC has 8 zonal offices, 113 divisional offices, 2048 branch offices, 73 customer zones, 1401 satellite offices, and 1240 mini offices in India. LIC is also present in 14 countries through branch offices, joint ventures, or wholly owned subsidiary. Government of India has a highly subsidized insurance scheme for the weaker sections, the Aam Aadmi Bima Yojana, AABY. Social security schemes targeted especially for the poor and the underprivileged. Social security schemes pertaining to the insurance and pension sectors are Pradhan Mantri Jeevan Jyoti Bima Yojana, PMJJBY, Pradhan Mantri Suraksha Bima Yojana, PMSBY, and Atal Pension Yojana. National Pension Scheme, NPS. The features of the NPS design are self-sustainability, portability, and scalability. Subscribers maintain a single pension account, permanent retirement account number, PRAN, throughout the saving period. Pension Fund Regulatory and Development Authority, PFRDA. The process of making NPS available to all citizens in curtailed the appointment of NPS intermediaries, including institutional entities, as points of presence (POPs) that serve as pension account opening and collection centers, a centralized record-keeping agency (CRA), and pension funds to manage the pension wealth of the investors. The Department of Posts has also been appointed as POP (point of presence) in addition to other financial institutions, expanding the network by more than 5 times. The Rural Housing Fund was set up in 2008-9 to enable primary lending institutions to access funds for extending housing finance to targeted groups in rural areas at competitive rates. Micro Units Development and Refinance Agency Limited (MUDRA) is a refinance institution set up by the Government of India for development of micro units by extending funding support to encourage entrepreneurship in India from mostly non-corporate small business sector. Under the guidelines of Pradhan Mantri Mudra Yojana (PMMY), Mudra has launched 3 innovative products, namely Shishu, Kishore and Tarun, which signifies the stages of growth and funding needs of the micro units or the entrepreneur. Any Indian citizen who is involved in income generating activity like manufacturing, processing, trading and service sector and whose credit need is less than 10 lakh can approach either banks, microfinance institutions, MFIs, financial institutions or NBFC for availing of Mudra loans under PMMY. It also extends funding support under PMMY for agriculture. Credit Guarantee Fund for Skill Development to guarantee the loans and advances up to 1.5 lakh term loan or any other limit as may be decided by the settlor, sanctioned and disbursed by the lending institutions without any collateral security and or third-party guarantees to the eligible borrowers pursuing skill development courses as per the skill loan scheme by any Indian national taking skill loan having minimum qualification as per the National Skill Qualification Framework (NSQF). The fifth department under the Ministry of Finance, the Department of Disinvestment, was renamed Department of Investment and Public Asset Management (DIPAM) in 2016. The mandate of the department includes all matters related to management of central government investments in equity, including disinvestment of equity in central public sector undertakings. It takes decisions on the recommendations of the administrative ministries, Niti Aayog, etc. For disinvestment, including strategic disinvestment, all matters related to independent external monitor or monitors for disinvestment and public asset management as a financial policy, proceeds of disinvestment are channelized into the National Investment Fund. So these small statements are important for your competitive exams. You must keep revising. Salient features of current disinvestment policy. The salient features of the policy include public sector undertakings are the wealth of the nation and to ensure this wealth rests in the hands of the people, promote public ownership of CPSEs, the public sector enterprises. While pursuing disinvestment through minority stake sale in listed CPSEs, the government will retain majority shareholding, that is at least 51% of the shareholding and management control of the public sector undertakings, and strategic disinvestment by way of sale of substantial portion of government shareholding in identified CPSEs up to 50% or more, along with transfer of management control. National Investment Fund (NIF) receives the proceeds from disinvestment of central public sector enterprises, selected public sector mutual funds, for example, UTI Asset Management Company Limited, SBI Funds Management Private Limited, and LIC Mutual Fund Asset Management Company Limited were entrusted with the management of the NIF corpus. As per the scheme, 75% of the annual income of the NIF was to be used for financing selected social sector schemes which promote education, health, and employment. The residual 25% of the annual income of NIF is used to meet the capital investment requirements of profitable and revivable public sector undertakings. This brings us to the end of the fourth and final video on finance. Keep revising and please subscribe, like, share, and do press the bell icon for updates. Best of luck for your forthcoming exams.